All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, but I gotta start with a pretty picture because at the end of August today, everybody has lost. Yes, I know it's hard to believe we had such a $4 trillion rally, but we ended the month negative. And take a look. This pretty picture is showing you the best performance across major assets. This is stocks, treasuries, investment grade, high yield, commodity, literally everything. And if you notice, that is negative. And the last time it was this negative was 1981. Pretty much, it is very rare for the best performing asset to go negative the next month later, and especially with everything. So this is related to that cross asset correlation we talked about, but overall, we saw more downside today. We are coming down, and actually, let me give you another pretty picture. This is in the keys, but for real, I hope everybody understands this because we've been talking about June so much, but taking a look at where the market is today, go back to April, it's kind of starting to look like that. So we got a lot to talk about. There was a bunch of news today. You got updates from OPEC. You got jobs data, preliminary jobs data. You got some more manufacturing, overseas CPIs. You had Walmart raising the price at Sam's Club, Bed Bath & Beyond. They were cutting staff. So was Snapchat. Then Snapchat gave number. I'm telling you, there was so much today, but the reaction was crazy. And ultimately, we ended lower, and we still got to wait for the rest of the week. So I got all that. I got the plays, the keys, everything else. The day trades hit again today too. And well, yeah, that's it. So drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. YouTube.com/The Stock Market. Right there, right there. First link in the description, baby. You like it? It's the bleach shirt. We back, baby. We back. You know, I'm feeling good. I feel it. Run it. Nah, honestly, that was an awkward run it. I don't know. I feel like y'all gave me, I could just use run it to get me, run it. You see, I could get out of any scenario, but Chad, let's go. It's game time. Now you run it.
Walking to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
So right off the bat, Chad, obviously the easy thing to notice about today, it was that we moved down, and I hope you watched yesterday's watch list. You saw the levels come into play. I even have a couple for you to look at, but beyond that, the biggest thing about today, in my opinion, was the bad jobs data was a really big warning. Why do I say that? Because we had a new data set. It's actually a new jobs function thing that they came out with. It is a brand new way to monitor jobs data. It's just another one of these data sets, but that came in negative. And why is that a warning sign? Because remember, bad data is good, good is bad. But today, a bad jobs number, you would have thought that would have brought the market up, and we were up for a little bit, but by the end of the day, that didn't hold through. And why am I saying this? Because think about what happened at the last jobs report. It was a very good non-farms payroll, and we did sell off. It's not as if we dumped, but you could see it right here on the map. It was like August 4th, August 5th, and it did lead to a little bit of a decline, but then we were able to start climbing back up there. But the point is now, leading into the non-farms on Friday, this might be an early warning sign that maybe we get a different reaction, or at the very least, what I said yesterday, this is that hangover from Powell where the market's kind of doing its own thing and not really reacting how we've been seeing it react as far as recently. Again, this whole bad data, good news, bad news, that's kind of been the recent phenomenon as we try to interpret the Fed. So keep all of that in mind. It was a very, very big deal. So that is your first key. Key number two, like I said, you had bad CPI data. There was a bunch of other news all across the world. And the one thing that kind of made it better is that UK gas prices or power prices, they actually came down. And ironically, our UNG went up while our oil dropped. But overall, this is going to lead into the last key. But a lot of it is kind of now being a response overseas from Powell. What I'm trying to say is that, yeah, we've had a reaction since Jerome Powell, but there's kind of been a bigger reaction in other places. Obviously, our equities and stock market move, but the currencies and everything else, and again, the bad CPI data, just keep in mind, we have our CPI in a month, but this whole week, Germany, UK, everywhere else around the ECB, they've been coming with hotter and hotter numbers, so maybe that's a warning sign, but who knows? But overall, when we're not watching the market respond how we expect it to, it's just one big flashing light. Just like pay attention to overseas, and even coming into the rest of the week now, keep an eye on Europe, as I think that's given us at least like a third of our movement throughout the day, more or less. And even Europe today, they started out good and then sold off. It was a little bit reminiscent to what we had here today. So that is your second key, number 3. Now let's get to the levels. We talked about this today, that 395.90, that was the new level here today. Again, that 396, it's pretty much where we closed at one of the last ones. Again, I could pretend that I'm doing like technical analysis or like I draw it out. Again, why I say pretend, I am not trying to shit talk you, bro, okay? Like for real, calm your ass down, relax. All I'm saying is that I use basic support and resistance, and I am just using opening and close prices. Obviously, we've mentioned those 50-day moving averages and some of those Fibonacci's as of late, because those haven't hit in a very, very long time. But overall, I am acknowledging you're getting a lot of movement there. You're getting the VWAP moves. Again, it's looking very computer driven, but why I'm trying to give you the explanation and why I'm trying to simplify it and telling you I'm just looking at open and close is because I want everybody to understand where I'm coming from. So hopefully, I know I got my history with technicals. I know some people get sensitive about it, but I hope you see, I want people to understand it, and clearly you've been able to see it there. So that's what I did today with the 395.90, the 396, and now 394 all the way to 390. Those are the next levels that we've seen. And I don't know if 394 was a big close, but I do remember, I'm sure a lot of you just remember, it took a while to get above 393 in general, and that really did act as a key level. But what I'm saying for the rest of the week, watch that and see how we trade at 394 tomorrow. If that flushes through, it's going to lead the door to 390. I don't know if data will make us go below that, but if we do, then we are quickly going to be back to 387, and now we are firmly back in the danger zone. So to the last key, and like I already said, this is looking like April. I mean, it's just not like June. June was a lot different. There was a lot of stuff in there, but when we look at how March through April played out, literally to the first day of April, that slow sell-off, a little bouncing, and then again, another leg. It happened in various waves. It looks to me like that's what we're seeing here. So I am going to keep that in mind moving forward. And finally, I brought this up a lot. I know we have the play. It's hard to play YCS and you're seeing it, but maybe by the data, the end of the week, again, coming into next week, got a couple theories, but the yen is silently screaming. Just take a look. It's been climbing up here little by little. It's made its way back to the highs, and if it breaks out above here, it gets back to the 1998 levels, and it could cause a big flush from there. And if it does get any worse, we'll have a problem. But like I'm saying with UK and everything else, just pay attention to that, because we might actually see that lead next week, or at least I'm going to be looking for that as an indicator. So that's the main breakdown, Chad. Very, very simple. We got 2 more days left. We're going to have to digest it all, but it's overseas data. Watch the levels, watch our data, and I hope you remember April. There's just a lot to digest, so where we go from here, it's going to be exciting, so I hope you're ready, but let us get into the plays. So, right off the bat, I got 3 stocks that I'm looking at. I have a play in all of them, actually. So, yeah, nothing else that's fresh, more or less. But I do want to go over these, and I think these will be good to watch. And number 1, EPV. I grabbed this. Again, I've been holding it for the last couple days since last Friday. I said it's not a day trade, but it's more of a swing. But again, it is a volatility index. And what I'm saying is that maybe I'll want to sell out of this one soon, but just be careful with any volatility plays. I'm bringing this up first, but I want you to understand anything that's like 3 times levered or iShares this, and it's just based on a mechanism to track something with leverage, just understand it is by nature designed to decay just like an option. So keep that in mind. But what I'm saying with EPV, it's already shot up. I'm surprised I'm even up with how things have played out with some of this choppiness or the back and forth, even though we've ended up lower. But what I'm saying, play the dips on this. And the reason why I like it is simply it's a volatility index that seems to be working. It's actually breaking out. It's actually moving with the levels, a small move in Europe. It's actually causing it to go up. And just look at any Europe ETF. Again, the premiums are weird, but they're all pinned. So even though there's been good news and oil prices have came down a little bit, I mean, the equities aren't really representing that, and you can see they're kind of doing that Baba pinned at the floor. You know what I'm talking about? Yeah, so watch out for that. Still got 200 shares. I'm only up like 50 cents a share on it, so nothing too crazy, but that's play number one. Then play number two, WDC and Qualcomm, and this one's going to be risky. I shorted 50 shares of WDC today, so I have a play on that. I chose not to play the Qualcomm, but both of them got bad news. STX in the morning, they guided lower. It affected Western Digital, they were down, and then Qualcomm, they got into a lawsuit with ARM over like patents and violations and stuff like that, or it was trademarks and violations. I don't know about patents, that was their last case, but overall, they both have bad news. That's the good thing, but the chips have been weak, and now this is where I'm saying it's like risky and good. Pretty much, they've came down so much. The chips have been getting battered and beaten, and if we come into more volatility and they're at lows and break levels, that could be a lot of carnage, and that's the opportunity that I like. But the risk is when I'm making my calculations and I'm buying 100 shares and I'm like, okay, how many dollars can it go up? How much would I lose? You look at the chip makers, they have dropped a lot. So you're kind of playing any downside play. You're probably going to pay a lot of premium. Even if you short it, you're going to open yourself up to a lot of risk. So I like it. We'll see. I went with 50 shares instead of 100. Again, slowly scaling into some of these plays and going from there. But going to definitely keep my eye out for them leading into the end of the week and next week. And then finally, baby, corn and wheat. Don't go too crazy. I actually have an update for you, and I talked about this today. I am still holding corn, and this is going to be a swing trade. I still have wheat. I'm down on my shares, and unfortunately, the Octobers have been clapped. Those were the original ones from the beginning of the year, but I am going to be riding these through, and I like corn, but what I want you to understand is that how oil moves, it is going to feed into all of these commodities, especially agriculture and especially corn too. But what I want you to know, here's an update. They are changing the way that export numbers are going to get reported. And pretty much we're not going to get any data on any commodity up until September 15th. So what does that mean? Corn and wheat are probably going to move with oil and the rest of the commodities, so keep your eyes out for that one. But those are the main plays. As far as everything else, I did make a couple of trades today. Again, things were actually looking pretty decent, but I started the day with those 50 shares of WDC. 42.37 is where I shorted it. I think I'm up like $10 or something. Then I shorted Netflix at the top. Remember, I closed $7 a share yesterday. I said that it was kind of like a volatility play more or less, but that Snapchat, Netflix news, it shot them up, and I was like, well, hey, it's now like $7 higher than even where I shorted it the couple days before. I said, let me grab some. I did another 50 shares, and by the end of the day, it did slip up. I closed out at 229, made like $140, so a decent day trade. Then I bought Tesla at 276.14. I got just above $1 per share. I sold it out later. It was like a $30 trade or something, and then I grabbed 100 shares of Walmart at 133.06 because of the price hike raise, and why I went with 100 on this one, even though Walmart's kind of expensive. I explained this on the stream. Again, here's the chart, and what I do with the shares. Again, 100 shares means you will make or lose $100 for every $1 per share, right? So I like to look at the top to bottom to see, okay, how much risk will I expose myself to? So if I bought in at 133, I'm saying, hey, if this went to the low of the week today and just shot all the way down, how much would I be down? It would be $300, $3 per share. I was like, well, risk to reward's not too bad because it was up even way more than $3, $4 just a couple weeks ago. So I liked it. There was news. We'll see. I'll probably flip out of this tomorrow, but if I don't get any gains, I might be willing to ride it like you've seen. But those were the main plays. As far as everything else, I'm watching the oil plays like a hawk. The BPs came down today. It did go below our price for a little bit. Then it popped back up, but I hope you watch yesterday's watch list. If you missed it, the point is oil premiums have came down in the last couple days, but they are still jacked up from the last couple of weeks. So when they do come down, that is our opportunity to build. I want to buy them when nobody wants them, pretty much. Again, I'm telling you, hey, we want them, but you've seen this many times. They will go up and down, and there's volatility, and even the lack of liquidity in oil markets, it is kind of spurring this. So there's a lot of opportunity just watching those, watching the yen and everything else, and then seeing where the data takes us and where the market's positioned by then. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, you were made for this, but I want you to understand, familiarity breeds contempt. We didn't have philo today. I want you to let it settle in, because I'm telling you, if you can't use these philos that you've been given, and I need you to jumpstart it, bro. You gotta bring it to life, or it will be useless, and it will harden your heart again. The more you get familiar with something, it goes from useful to ordinary. Stop playing with me, Chad. So make sure you don't fall into this trap. Just stay a little focused, but meditate on it a little bit. Maybe realize how far you've came, but Chad, I need you to focus on right now. Right now, baby. Are you ready? Right now, Chad. Right now. So let's go, baby. I just broke everything on my table. I love you. God bless you. And I say, I'll show you this. I was going to show you this, bro. My arm. So you see this wrist? Like there's nothing, right? Look at this, bro. Anybody who my ganglion cis gang, you see that, bro? That's 215 pounds. 225 on the bench. Oh, look at that. I want to hit it. When I was little, we tried to smash it with a book. You know what I'm saying? Like, oh, come on. Where you? All right, I got to go.